So starting off, so you found a deal. Now what? Now you got to find money for it, right? Whether it's a fix and flip, transactional funding, whether you found a wholesaler that got you something, or it's a buy and hold, you're going to need money for it, right?
For some of the scenarios we're going to talk about today, for a lot of the financing, we're going to assume that you already know what the cost to renovate these properties are, and you know what it's going to be worth after that renovation. So let's jump into it. So we're going to talk about 6 different money sources. We are not going to deep dive into all of them. So if you have questions about the ones we don't deep dive into, we'd love to answer them separately. But if we really got into all of these, we would be here for days. Some of these can be 1.5 to 3 hour presentations in and of themselves. So we are really focusing on deep diving into hard money, a DSCR, and then kind of touching the surface of everything else.
All right. Source number 1, pretty easy, cash. You want to buy a $200,000 house? You got $200,000? Guess what? You could do it. All right. That's the easiest and cheapest in regards to just paying interest on money, because you already got it. You don't have to pay interest for it. But even if you have 100% of the cash, does it make sense to tie it all up in one property? There's a little bit of give and take with that. Depends on who you ask.
So source number 2, you'd be using friends, family, or partners as a private investor to help you come up with that cash. So this is still, we're talking about cash, but we're talking about splitting a profit with a partner, which can often be higher than what you would pay on a loan's interest. And it's complicated when you add multiple people, and you add emotion into it when you do it with friends and family.
Number 3 is assets. So if you own your own home and you got plenty of equity, you can use the equity out of that.
And a couple of you talked about that today, that you've used your home equity to buy something. So when we're talking about home equity, we're talking about the value of your home minus whatever outstanding mortgage you have. That's your equity. A home equity loan or a home equity line of credit is how you tap into that without refinancing, using that to fund another project, to fund renovations on another project. That's how that would work.
Especially if you got a nice cushy 2.75% on your mortgage, you definitely don't want to refinance that. So definitely want to tap into that equity some other way. Other assets, stocks, other investments. You could always sell your stocks. I don't know if it'd be the wisest choice sometimes, but there you can also leverage your stocks as well. So you can borrow on margin from your stock account if you've got enough. A good option, but might require you to sell or liquidate investments that you would much rather keep.
The give and take.
Self-directed IRAs, so you can definitely borrow from your retirement accounts to buy investment properties as well. There's a lot of red tape when it comes to that, as far as what you can do with earnings from it. It's got to go back into that IRA account, but that's definitely something you could chat with your financial advisor about and be able to pull some money out of that.
Source number 5 is subject to financing. This is a big one and is a presentation in and of itself that we will hit on next year. We will do a presentation on subject to financing. This definitely takes a full 1.5 hours to talk about this here. This is talking about seller financing. So this is where you take the rights to title of this property and you overtake the existing mortgage. So you are going on title. There is no formal approval process from whoever owns the existing mortgage from the bank. You just take over the payments. So again, this is its own presentation, but if you have more questions about it, we're happy to answer it. It's very, very in-depth though, so we didn't want to dive too deep into this one and get down a rabbit hole.
Yeah, definitely a fun one though.
Yes.
All right, and then we've got traditional loans, which I'm sure a lot of people know all about that, right? All right.
So we're going to touch on a couple of different loan sources here. The first one being obviously traditional financing. These are going to require reserves. They're going to look at your credit. They're going to look at your income. They're going to require 20 to 25% down payment. They're going to require appraisal, underwriting, at least 2+ weeks to close. And a lot of rehab deals, when you look at them, they're not going to qualify for traditional financing because of the property's condition. So this is not always an option. If this is not an option, this may be an option. DSCR, go back one more. Nope.
Getting trigger happy.
DSCR is another type of loan. I believe we've talked on it about it in some of our previous meetings. This is an investment only loan. It's typically used for buy and hold. It does not use the income of the borrower. It uses the income of the property. It can be done on a single property. It can be done on multiple properties. I just had an investor close on 2 at once. You can close them in your name. You can close them in an LLC. So a lot more flexibility with this. There's no limit on how many properties you can do when it comes to a DSCR loan.
So you did one DSCR loan for 2 properties?
I did 2 DSCR loans for 2 properties simultaneously.
Okay. All right. Cool.
And then some of the loan terms when it comes to DSCR, 20% down payment minimum. You get a little bit better interest rates at 25%. They are going to have a reserve requirement. Most loans on investment properties are going to require that you have 6 months of reserves in your account. Some will require 3. They're also going to have what's called a prepayment penalty, which loans on your primary residence don't have prepayment penalties, but these loans do. This means that if you were to pay off the loan within the time period that you set as your penalty, you're going to pay more because you sold it within that time period. Usually that's 3, 5, or 7 years. You can get these in adjustable or fixed rate, 30 years, 25 years, 20 years, 15 years, whatever fits your needs. And you can do multiple loans at the same time. Because again, it doesn't use your income. It uses the property's potential income.
Now these reserves, does that have to be in your checking or savings? Could it be elsewhere?
It has to be in an account that you can prove. It can be in a business account. It could be in a retirement account. It can be any sort of reserves that are in, I'm losing the word right now, life insurance policies, 401k, IRA.
Only the cash value of the
You
life
don't have to
insurance?
liquidate those if they're reserves.
Nice.
You can use them at 100% value and you don't have to liquidate those.
Reserves meaning it needs to be seasoned money though.
Yes, correct. Has to be in there for at least 2 months. And then private and hard money loans. So this is what we're really going to deep dive in today, and Chris is going to jump more into this. When we're talking about private and hard money loans, these are specialized companies that focus on these for fix and flips and rental deals. And Chris, we'll let you take over.
Yeah. You want to hop on up here? And then I am going to give you this. The power. You want me to pass these out?
Yeah, sure.
Sorry,
Join on the screen. And how do I click this?
No, that's a mic.
Oh, the mic.
This
Okay.
is the clicker.
I won't need a mic at all. No, I promise.
No, we're
For the
good.
Facebook
Okay,
Live.
that's fine.
Yep, the Facebook Live will pick it up way better.
How's it going, guys? Awesome. Sorry I was late. So this business never stops. I thought that was a joke when we started this company a year and a half ago, but it just doesn't. I had 5 unplanned fundings after 5 o'clock, so here I am. I'm excited to be here. I'm from Roanoke. I live about 3 miles that way, right at the base of Bent Mountain. So this community means a lot to me. That's the one big difference between us and most hard money lenders. I've been with Alcova Mortgage for 13 years. There are only 2 conventional mortgage companies in the United States that own hard money companies, us and Planet Home Lending. Planet Home Lending has a $1.9 billion portfolio. We're right at $100 million right now after a year and a half on our side.
Come on in.
How's it going? Good to see you.
I, like you all, I'm also an investor. I own rental properties. I do a lot of flips. My wife and I do those together, and I know nothing about construction, nor do I care to, but I do know that there's a way to make money in this field if you know what you're doing and you find the right deals. That's why these groups are invaluable. I've done grid groups, like I was telling Daniel earlier, in Bristol, Waynesboro. I've been in Charlottesville, thought about that one too. And everyone has the same mission here. There's a reason you're here on a Monday night. You know, you're not here for your health. We're here to make money. That's the great part about this. This isn't personal. This is just business. And all of you are here for a purpose, a reason. You want to grow your own personal wealth, or you all have kids, you know, spouses, anything. My goal was to make sure my wife didn't have to work again. And we stopped that like 6 months ago. And that my kids were taken care of, and we were able to pay off college debts. That's not a flex. It's just more of having a plan of action. You have to have something you're aiming for, which if you have like partners that help you along the way, you can do this. I'm not talking about just me. You have to have contractors you can trust, or you can do the work yourself. Realtors you can trust. You have to have people that are the end-all solution. Conventional mortgage lenders on the backside. That's a biggie. You can do this flip as well as you want, but if you don't have pre-qualified borrowers, you're wasting your time. Cash is still king, but let's be honest here. We're trying to get single family residents back up to speed, correct? That's what we want to see. Even though I own some Airbnbs, we have to slowly kind of kill the Airbnb market. We're here for like the dream of home buying. I like to give this example. So my wife and I have a 26-year-old. She just got married in June, finished her MBA at William & Mary. Her husband got his law degree at William & Mary. Their starter home, north of Atlanta, was $840,000. First time home. It's a piece. It needs like $150,000 in work just to make it up to snuff. That sucks. It really, really does. Because I think we can all kind of remember that feeling of optimism, a chance to grow, a chance to progress. And in these times, it's not easy. I mean, I could ask you, like, how's the real estate market going? Do you love every second of it right now?
See these gray hairs?
Yeah.
I didn't have those 3 years ago.
I trimmed my beard down, after I saw you at the tailgate on purpose because I saw the grays in my beard. So I understand where you're coming from.
It's stressful.
Yeah. I asked this question, and the truth is it comes back to one thing. You can analyze and have all these ideas, but inventory is still a problem. We have to create inventory. We have to create home buyers. We have to get this moving. So you guys are instrumental in this. And not to underplay, you can make a lot of money doing it. A lot. So let me pop over here. Do I just hit the... Okay. I'll let you, if you guys want to discuss this, but what I'm going to jump into though is more of how...
One more, this will show up.
I can jump over
Yes.
those real quick though. So
Okay.
all you're seeing on that slide.
Exit full screen on here? Or
No.
Go back.
I know it's because we use a mouse. This is why we should have a clicker, Daniel. There we go. Okay, so these are just kind of overview tips when it comes to hard money lending. When we're referring to hard money lending, these are for commercial, non-owner occupied real estate held for investment purposes. We are not talking about you buying your first home with a hard money loan. With these loans, in general, the credit of the borrower is not as important as the quality of the deal. Points and some interest are normally prepaid at closing. That's expected. And the cost of the loan is directly related to the risk taken by the lender. The riskier the loan, the more expensive it's going to be to you.
Absolutely. So if you has anyone used hard money before? Anyone? Okay. So I have plenty, and I've used a lot of big players. Kiavi, Anchor, RCN, Lima One, every major player, including private, people in town, because everyone knows a 10 and 2 person who's like, I'll give you this at 10 and 2. That's fine. We love private money in general because it's a really cool concept. But with the fact that our parent company is a conventional mortgage company, we had to kind of reinvent the wheel here. It's like, okay, you can make oodles and oodles of money, but do you want to do this ethically or just do it the way business has always been? It turns out when you treat commercial investors like clients, all of a sudden something clicks. They're like, wait a second, you actually respond to text. I text you on a Sunday night, and I know that you guys are out here doing this, and your son plays travel baseball because all my clients know me. So you guys didn't get home till midnight, but I told you I needed 3 properties to close by Tuesday, and you were able to do it. Well, if you treat people like people, it goes a long way. So we just reinvented all the terms we've seen normally. So we came up with a very simple concept to start off on the jump loan, the first loan. It's a simple 90. Number one, our rates are 1099 interest only. I'm going to give you guys a big preface here when it comes to commercial investing. Everything's negotiable. This isn't your dream home. This isn't the house you want to see your kids raised and your grandkids raised. No one gives a crap about that. It's where you can make the best amount of money for yours, and it's the best risk for us. So that's a little negotiable, and you'll see it slide down a little more here in the coming months because we're working on something else. Our terms are flexible, 6 to 12 months. If you only need 6 months, I'm going to give you a lower origination right out of the gate because lower risk for me, I can get rid of the note easier, not a problem. 12 months, we want to go the full 3-point origination. We also go against experience because if someone has no experience, we're willing to work with you. Now I'm not talking about an HGTV investor who's like, I've watched Chip and Joanne, I can flip this house. You cannot, and I assure you, you will not. Find someone else or find some cash. But we're willing to start with the first timer because this is all about character. If it's your first time, it's a giant risk. But if you show me $100,000 in a bank account and a 780 credit score, okay, I'm working with a normal person here that's sound mind, body, and spirit that wants to do this. So we're willing to give you that opportunity to grow your track record and your portfolio. 650 plus minimum credit score on the guarantors. These are recourse loans, but we do close in an LLC, just like most hard money. We just have to have guarantee these are individuals that can back it. The one big thing that we changed up front, we're willing to, on the first deal, finance 90% of purchase, 100% of renovation. Number one, hard money lenders will not touch rural properties above 65% loan to value. Why? We own a mortgage company. We know what these homes sell for. We know what they can be financed for. So we're willing to offer this on, even if the CFPB website says rural or an appraiser, we'll still honor these terms. I'll tell you right now, personal experience, the biggest flip my wife and I have done in the last 3 years is a property in Willis, Virginia. Anyone ever been to Willis? Okay. We made like $125,000 in 3 months for a cosmetic flip. And then we had a free and clear lot that we did a spec build on. There's diamonds in the rough everywhere. You can find them. You just have to have a partner that's willing to help here. We want to be that person for you guys because number one, I know Daniel, for instance. I know that he is friends with some of my best loan officers at Alcova. I don't need all the business to go back to Alcova, but I would love to have the opportunity, if he has that pre-qualified buyer through an Alcova partner, let's have this thing sold before it's even done. We want to see these properties thrive. You all make money. We're here for relationships. I can do one and done deals all around the country, but I only lend within the Alcova footprint intentionally. I have boots on the ground and I have people that care. Like, this isn't lip service. I live here. I want to see this community thrive. You know, I know every part of town. I've done flips, you know, in Southeast. I've done Vinton. I've done everything. But I want to see this community bring single-family residences back. I'm originally from Covington, so I know a community that's dying. You know, we have to reinvent the way people look at investing. Everything, yes, is truly a dollar figure, but if you can enrich your community and bring families back to these small towns, mid-level, you know, cities like Roanoke is, we have a chance here to make a lot of money for you all and really help folks along the way. We would like to be your resource to help you on the hard money side. I want these folks to be able to help you on the real estate side, and if you need someone to help with qualified borrowers, we can help with that too. Like you were mentioning earlier, we don't need appraisals on these properties. We pay a lot of money for in-house analytics. I can run an AVM that's usually within about $5,000 of a full-blown appraisal before we even look at the property. So you can just text me and say, hey, let's talk scenarios. Let's look at some options here. We want to help you guys grow and do 2 or 3 flips at a time. Other big thing, I have someone that works for me in Asheville. We can convert these flips over to DSCRs. That's the thing that I've learned through my own experience is that halfway through a flip, all of a sudden you'll be like, wait a second, every house around me is rented out. I wonder why. Once you have them to true market rent readiness, these things can cash flow well if you want to have a long-term hold strategy. So we can help you in the middle of that convert over to a DSCR product. We have limitless, options. We have everything you could possibly need. So I think the best thing that I normally do is just, what questions do you have? I can tell you what's crazy, what's not crazy, what I can help with, what I can't help with. Please.
What is DSCR?
Debt service coverage ratio. So it essentially means in layman's terms that your monthly expenditures are outweighed by the income. So you want to have a nice ratio showing that you're bringing in more money than you're putting out. And also it's a nice way to free up your conventional portfolio because you have a cap on that. You can roll them over into actual rental portfolios.
You do lands on property that you want to put sewage, water, a trailer, it's raw land.
That's the one thing I, as well as most people, don't have an appetite for right now is raw land. However, there's a strategy with that. Let's say you find a flip opportunity that has, 10 acres with it. You can parcel that up and I'll do the spec build based on the fact that you did a flip on the adjoining property. We can help you there. We just want to make sure that we're like driving cops up in the area to sell them for more money.
What would that look like?
So I'm doing one right now, right outside of Charlottesville. A guy bought 2 old brick ranchers, both built in 77, 3-bed, 2-bath, SFRs. He did flips on both, parceled out the other 3, and we just did a spec build. And we did it just like this because that's the cool part about this. We can invent a product on the fly. We're like, what did the community bank offer you? And he said this, but it's a long underwrite process. We don't have to long underwrite. I mean, we can make this money appear in 2 seconds. Money's very easy to come by. But we just did the same thing. We're like, what rate were they showing you? What do we have? So we met in the middle. We did a 9.99 just based around the draws. And they only pay money against the money that's drawn.
So what holds the loan? The 2 brick ranches?
So that was on the first 2. But then he owned the lots free and clear. So we just went a normal spec build, just like if he was a normal consumer. But there's a lot less risk involved with construction if it's someone selling it. You know, with Alcova, we have construction to perm products, which is great, but we'd rather have an income generator on this side because we don't have people that want to tie up money for too long. They just want to make their money and move on to the next.
Cool. I mean, can you talk more about the cost of the loan? How does that look like?
Sure.
Say like the minimum loan amount will start at $75,000. What's the cost of that?
So we'll start at the 3 points, which is 3% of their, that's the origination charge on it. I will tell you, this gets very flexible because when I say I want to build a relationship, I want you to come back to me for every deal. Like the ones I closed this afternoon after 5, every single one of them are on one of them is on their 25th loan with us. One's like their 38th loan with us. So these folks are doing large volumes, so it's a lot easier. I want to get past this point of 9,100 because the truth is we're here to make money. And if you find good off-market properties or anything that has a nice after repair value, I'm going to offer you 100 on that. So the 3 points, you know, for these first few flips is not going to change. But if you're getting a better offer from someone, this is our money. We're not using money from other sources. So I want to be able to negotiate with you. And if it makes sense, we'll do the deal. Yeah.
If you're not really flipping it, if you're just fixing it up to hold. So you don't have any flips in your experience, but you have brokers that you rent out.
Our track record has 2 places. So it's a fix and flip section and then an REO schedule. So if it's something you already own, that counts towards your number of quote unquote flips. So if you have 10 rental properties, that already surpasses and goes into the 5+ flips category. Yeah. Yeah.
You said 3 points, you mean 3 points total, right? Not just
Across the whole thing.
like
Yeah.
3 points
Mhm.
total. And first timers, you do 90%?
Yeah.
100? Okay.
9,100.
Okay.
Unless you come to me and say that if you found a smoking deal, and I can analyze real quick and know that you found a smoking deal, and we have a team around me that does this as well. So if it's a great deal off the jump, especially, you guys have a benefit here. You're in Roanoke. I can call BS pretty easily. And like, if you guys have a good property, I know it's a good property. You know, I want to see this work. So we have no problem offering 100 for qualified, you know, flippers right out of the gate. We want to make this work for everyone here and everyone involved.
What about, sorry.
Oh, go ahead.
What about like somebody, I guess, that has a primary source of good cash flow? Like for me, with landscape business. The reason I asked is because I had this situation where a deal almost fell through. Had a local hard money investor that kind of backed out on me, and because it was a 100-year floodplain zone.
Mhm.
And put me in a situation where I've had to under finance for 6 months.
Sure.
And then get permanent
Right.
financing through a bank. So I was able to do that.
Mhm.
So I looked out of town. I went to what's called, well, I'm not going to say the name.
Sure, go ahead. You're fine. No worries.
Lending One
Mhm.
out of Miami.
Yeah.
And or somewhere down there. I think down here. Anyway, so they referred me to somebody else that had no experience. And I think he was going to do 70. No, he was going to do 80%. So I'd have to put 20% down. And then I think it was going to be 2.5, and then like 12.9 on the interest. But you'd have to do like what I'm getting at is you're doing 90% from first time.
Yeah.
That's a big deal because there's a lot of people that are not doing anything close to that.
And not just that, but like what you're saying is what we've heard a million times. So when we started this company, we've all dealt with hard money. I mean, me personally, you know, I've worked with, like I said, Lima and RCN specifically in the big player world. And I've paid 14.99%. I've done 4 points on an origination. The crazy part is there's money to be made on all of this. Just like you all can make money, we can make our money just being normal. You don't have to fleece people for fees because it's just not worth it. Because great, I'll make a ton of money off of you in the first time, but you're not going to come back for the second one. You know, so why would we want that when we can have a nice 10-year relationship with you, or as long as you want to do this? We're here because number one, the thing that's different from Alcova, I can cherry pick. Literally, we don't have to give a statement of denial or anything. If I just don't want to lend to you, I'm not going to lend to you. But we want to build relationships. And for me, I know in my mind at all times, even though I like the whole Alcova footprint, this area of Virginia down to Charlotte is where I love to allocate a lot more money. Because like I said, we just have such a presence here. We know everyone. we want to see where our money's going.
Right here, you have 3 years experience, but essentially, experience is king. But you look at other avenues of what they have going on, and then
That's the cool thing about hard money. Any one of the 3 facets. So I'm not sure if anyone's ever been told what the premise of hard money is. It's cash, credit, and experience. So if you have crap for experience, but you have great credit and great liquidity, that outweighs experience real fast. You have a ton of experience, but overall, extended credit, because, in this world, it's easy to have a lot of liabilities, especially if you're doing a lot of construction work on your credit score. We can outweigh any piece. It's all character driven for the most part. Yeah, let me, yeah.
And that was, okay, worst case scenario, a borrower comes to you, try to go into business with them, but for whatever reason, the deal just doesn't happen. Falls through, construction done. What's the worst thing that can happen to the borrower?
So we look at it from our angle as well. So hard money by its very nature, and I hate to say this, but like, if my wife were here, she's my best partner in crime to give this discussion. So she goes to a lot of conferences with me. You'd be shocked the number of guys that show up in like Bugattis with Gucci suits on and like 3 gold chains, because that's how I've always viewed hard money. Because really, it can become very seedy very fast.
I'm going to be honest with you. I know hard money.
Yes.
Look at our research. But in the neighborhood where I grew up, they were called loan sharks.
Absolutely, they are. Yeah, because
So I know it's more technical.
it's completely a sharky business. It really is. So when we set off to do this, it was like, okay, your parent company is a conventional mortgage company that has a very good reputation. I'm sure Daniel can speak to that. We take client service to the highest level, and we care about what you're actually doing. My only goal here is, if you guys use us for any of your deals, is that you have a successful flip or conversion to a DSC or long-term hold. I don't ever want to foreclose on a home, because that's one big thing about the loan sharking, and the reason the view is that way. Notoriously, hard money lenders love to get a project about 95% done, then find a reason to call the note. Why would you not? There's only about $6,000 worth of work left, and you can take the home and sell it for higher money. This is especially relevant in underserved rural areas. Anywhere there's a strong Latino presence, Atlanta, areas like that as well. They were preying on folks to do these loans so they could foreclose and then sell them for top dollar. That was a big thing. We're not like that. So we eliminated every capacity to try to avoid that at all costs. Number one, we never have a prepayment penalty. If your flip only takes 30 days, awesome. Pay it off. Let's move on to the next one. If for some reason it goes past term, because we're very cognizant, we've all done this, things happen. Septic may go bad, or you go in there and the electric's completely fried, or all of a sudden you have a parcel that has a weird flood zone on the back. So there's going to be extenuating circumstances. We don't charge the point to extend, because every other hard money lender has a provision in their contracts that says we'll charge you 1 point for every month you go over term. There's no reason for that. That's shaking people down. We don't like it. We've had it happen to us personally. So we eliminated every part of that to make it where our experience is very much like the conventional lending process. So the worst case, back to your question, that could ever happen is we would have to foreclose on the property. However, we will do everything in our power to stretch this out to make sure you at least get to the finish line and make a little money. The goal is you come back to me and you're like, hey, I made 80 grand. That was awesome. That was easy. Yeah.
The beauty of hard money is it's all about relationships. And
Mm-hmm.
you can tell that by the way Chris speaks. So the hard money lender that we use in Northern Virginia, he's told us, it's not a good deal. I'm not going to lend to you.
No.
And we're like, okay, cool. We're not doing that one. Sorry, bye. Like, they know enough about the area and they know enough about the deal that they're going to be there to guide you through some of that as well.
It's never a bad idea to have somebody else underwrite your deal.
Yeah. Well, and because of the fact that we have such a presence in our local markets, this just happened, I think it was Saturday, we were at a travel baseball tournament, and a property came up on my phone, and one of my normal flippers who I work with a lot, who sidebar story for him, he was always declined because he was an I-10 borrower in Charlotte. The guy has $500,000 in his bank account. His credit score is 730, but because he's not actually documented, even though he has an EIN, a really good LLC, and a heck of a track record, we took him under our wing. And he's done 13 or 14 flips that have only went a max of 3 months. Well, he had a realtor that steered him towards a property and was like, hey, this is a great deal. You're going to get it off market for 160. Needs about 100 in reno, but it's going to be an ARV of like 430. And I was like, that seems a little weird, but okay. So I saw the address, and immediately I knew I'd already seen this property last week. One of our Alcova branch partners was like, hey, by the way, I almost bought this thing, but it needs $170,000. This realtor's just trying to get rid of it. So we're here to protect people and their interests, because anything that goes south for you goes south for me, and then it goes to Alcova. And we never want to like look bad. That's just it. If we're doing the right thing and we value what you're doing, you're going to have a good product. You're going to have competitive rates, and we're here to see your process and your project through to the finish. So Alcova, we just celebrated our 20th anniversary. I was one of the original 25 employees of Alcova. We have 555 in 17 states now. So our corporate office is actually on Market Street downtown, but we were founded in Covington. That's Alcova stands for Allegheny County, Virginia. So we're in 17 states now. But yeah, we have a huge presence. Who else? Well, thank you. I like to hear that. Awesome.
Any other questions for him? Anything specific to hard money?
So with the points, I did hard money one time, and I guess I didn't have any points. So he had some circumstances like you were talking about. The house had to be half the price of what the equity was worth, what the house was worth.
Exactly.
So that was the stipulation, because I was brand new, I was green, I had no
Sure.
clue, no credit, no nothing. But I found the house, so I just had to do principal payments. Did it for, I think I had to do it for like 6 months, 12% interest. But this is 6 years, 5 years.
So this is interest only. So we're never going to do the principal thing, because the principal demand makes sense if it's your own money. Like one of my absolute closest friends here in town, and I won't mention names or anything, but he has his own private equity group with 3 other guys. And I almost bought into this a few years back. Their cap is right at $5 million. So they have a great book of business for folks that they know, but they kind of have the same stipulations. No points up front, but you have to get smoking deals, which this day and age, it's easier said than done. I mean, I don't encourage people to always buy off MLS, but there's still some deals to be found, but we don't have those stipulations. As long as you tell me the purchase price, how much you need in reno, and it has a strong ARV, we can make it work.
Right. So those points are just up front.
It is up front.
And we still pay the, I guess, 10.
The interest only on that. So like if it's a $150,000 loan, you're looking like a $967 payment, interest only per month. Something like that. Yeah. Okay, gotcha. So it's the same concept, because anyone that ever tries to make you make a principal payment on a hard money loan, they're just trying to get more money out of you, because there's absolutely no reason to pay principal on this. This is a short-term investment for a large return.
All right. Well, thank you, Chris.
And afterwards, if there's any questions, let me know. We'll run through some areas.
Thanks.
So the second part of the presentation today is about how to be the bank. I think that's what's next. Not yet, but I think we went over a lot of the advantages and disadvantages when Chris was talking.
All right. And did you know that you could lend money to other investors just like the bank? So this portion, we're going to talk about becoming a private money investor.
So a couple of the considerations are that in considering doing something like this and becoming the bank, you should have successfully completed several wholesale rehab or rental properties. This is not how you start in real estate investing. You need to have a good understanding of the business, the markets, and the process of real estate investing to become a lender yourself. And we talked about it earlier a little bit about the self-directed IRA and using that to become the bank. So that's another consideration for here as well.
And you want to think about all these too, just like he was saying that, all these deals that he's doing around here, he knows exactly what the ARV is going to be because he's in it. And so he knows that if it's a good investment or not, if it's not going to work, you don't want to lend your money to somebody who's going to use it on a deal that's not going to work. And then you're going to end up having to foreclose on the property. And it's just more hassle than it's worth, and you don't want to do that. All right, what do you need to know? You want to determine what the ARV is because you want to make sure that your money's safe and invested well. How to properly renovate to add value and minimize risk. So, there's a lot to be said about overdoing properties. Anybody can go in and spend $150,000 on a house because they want to and they want all the nice things. But if you bought that house for $200,000 and the ARV is only $300,000 and you spend $150,000, you're screwed. So you definitely want to make sure that you're not over renovating. You want to make sure that you're renovating to the area. I know we've chatted a little bit before, but if everybody else doesn't have granite countertops in the area, you don't necessarily need to put granite countertops in yours. How to estimate rehab costs. Definitely want to have a good contractor to kind of teach you how to estimate good rehab costs. Me and my contractor Tyler, I know he's talked up here before. For anybody who caught him, I mean, I can walk into a house and pick out. I know exactly what he's going to charge for each room in that house, which is nice. But other contractors, you go in and they might have a little higher price, they might have a little lower price. So you want to make sure that you know what your contractors are doing. How to pull and review a credit score. So if they got bad credit and they've got a whole bunch of foreclosures on their property and overdue bills and things like that, they probably don't pay their debts very well. So might not be the best person to loan to. Then how to structure repayment terms to provide adequate security for the loan. And you can structure that however you want, because really it's all negotiable when you're dealing with private money. You can make it whatever terms you want to help protect you and help protect your borrower.
And that's what all of those pieces are about, educating yourself to protect yourself and protect your money.
Mm-hmm. Just like we said, everything's negotiable. You want at least a minimal amount of equity or skin in the deal. I know Chris was saying that he likes to give 100%, but that's after you've proved yourself that you can handle that. And you can do the same thing, but definitely that first go around, you want to make sure that they've got something to lose too, to make sure that they're not just going to screw it up and not have their heart in it. You want to get proof of funds for that required equity, because unfortunately I've seen it happen too many times where somebody says they want to buy a house and I'm like, yes, that sounds like a great idea. Let's go do that. And then they don't have the funds to do it. So you want to make sure that you don't get hassled along and waste your time, waste their time, waste the seller's time. It's not fun. And then get a credit application outlining the deal and loan sought and possibly signed release for credit report and application fee.
This is, again, just doing your due diligence. They pay a credit report fee. You've got them buying in a little bit. They're letting you pull their credit. That's impacting their credit. And again, it's a small step into buying into the deal.
You want to make sure they're serious about it.
And as always, we are not real estate attorneys. So talk to a real estate attorney if this is something you're considering doing. Know what documents you need to have in place to protect you, to protect your money, and to protect everyone in that deal in every facet.
Yeah. And we've got James T. Jordan as one of our sponsors. He's a great real estate attorney. If you want any legal documents wrote up, protecting your money when you're loaning it out to somebody, he's definitely a great resource to do that.
There's certainly closing attorneys that offer that as a service as well.
Mm-hmm.
Yeah.
Priority value, you can just go and say, write this thing up for me.
Yep.
Nice. Nice.
$500. Of course, it costs.
Yes.
All right. Well, did anybody have any big takeaways from today? Anybody learn anything? Yeah. Well, thank you.
Any further questions we can answer?
That's how I learned all hard money is very broad and different.
Mm-hmm.
Mm-hmm.
So I was,
Mhm.
yeah, 'cause
Yeah.
I was
Very
told
much
by
so.
a guy out of town, he said, if anybody's willing to give you 100%, he's a crook. Well, yes.
Mhm.
He seems pretty good.
Seems like a crook.
He's super nice.
There's no avenue.
But so, and I took that advice, and that was just 2 weeks ago, and I was like, okay. But then, you meet somebody like that, seems pretty nice. And so, do your due diligence. Don't just believe everything you hear, and do a lot of research. And
Mm-hmm.
yeah, that's one things I learned.
And integrity plays a lot of roles in it. Because I mean, just like he was saying, you got your loan sharks and then you got your good guys. So you just got to figure out the difference between the two.
I think that's what I was insinuating. A lot of loan sharks, which is what he was talking about. They hope that you fail, so they can take advantage of it.
Yeah. Unfortunately. Well, I'm under contract on 2 flips. Chris is lending on one of them. And then we just closed on a flip out in Salem. So that'll be going up for sale probably in about a month and a half now. So you got any buyers at 325, 335?
Is it 4-bedroom?
5.
Oh yeah, I got it.
Oh yeah. Do what?
Lindbergh area?
Nope. No, Salem City.
Oh, that's okay.
Yeah.
Yeah.
You can make that work? All right, cool. All right, already sold. Deal.
Flip through the last couple. So if you guys aren't a part of our Facebook group, join it. We like to interact there, ask questions. If you have questions for everybody else in the group, it's a good way to interact. Today's presentation will be on our YouTube channel, and then if you go to our website, you can RSVP for next month's event.
And then next month's event, we got this good-looking guy up here who's going to be our guest speaker. He is an Airbnb professional, so we're going to go over and learn about short-term rentals.
Yes, and bring
All right,
a
so
friend.
And it's going to be the fourth Monday of the month, October 23rd, just like every month.
Same
fourth
time,
Monday.
same place.
Yep, same time, same place. All right, so next, all you got to do is go out and take massive action.